Thank you very much, Tim, and thanks very much for giving us the opportunity to talk about DomaCom. DomaCom is a fractional investment platform, and what does that mean? What that means is that DomaCom breaks high-valued assets down into bite-sized chunks so that it's available to retail investors. And we do this with properties of all descriptions, as Tim was saying. We've done this across mortgages and loan structures, and also infrastructure assets. We actually completed a wind farm co-investment. So fractional investing, breaking down large assets into bite-sized pieces, and therefore really allowing the retail investor to get access to these assets. Next slide, please. The other side of the coin, and something that DomaCom has worked for many years on, was the equity release. So this is the opportunity where retirees, and very much food for thought at the moment, where retirees can release equity in their home, so they can sell a bit of equity in their home. So the other side of the coin, and we'll talk a little bit more about the equity release product. If I can have the next slide. So DomaCom, in terms of what is the DomaCom distribution strategy? Our distribution strategy is very business to business, so it's IFA, so we're an intermediated business, and we've been going just on 9 years, and over that time we've built relationships with the IFA market. So we today have over 45 different dealer groups, as they're called, that have approved our products. So that gives us access to over 1,000 advisors, and we've actually completed over 70 transactions today. We also work with affinity groups, and they're becoming increasingly important for the DomaCom distribution. And when I talk about affinity groups, I'm talking about the renewable energy companies and some very large players that are coming into this market, property developers, and also other companies that are looking to use and white label our products. What we've been able to achieve through some cornerstone investments, and Halo was the first in that, is for them to really build the business to consumer end, where they've actually got a distribution out to the end investor. So Halo, an investor of the DomaCom ASX company, and we're looking to have our second one of those, and I'll talk a little bit more about that during the presentation. If I can have the next slide. In terms of our products, so DomaCom's products can be really broken down into the fractional investing product, which is very much targeted to the SMSF market. And as we know, the SMSF market is a significant part of the superannuation industry, nearly 700 billion in assets. 50% of our investors today actually hold SMSFs. So that's targeted to them, where they can actually get a fractional interest in property, mortgages, or other assets. We've got the equity release product, which is again targeted to the seniors market. And the other product, and we're all in the hunt for yield in this time of the market where interest rates are very low, we've actually run pooled mortgage products. And we've actually got a client now that has over 20 million in the pooled mortgages. So that's giving first registered mortgages and high yielding returns for their investors. If I could get the next slide, please. DomaCom's worked very hard during its development. We still see ourselves as a startup, but this year I think is going to be a significant year for us. And we've worked hard, even though it's been a tough year with COVID. We've got a new product, and I'll talk more about that, the rental property accelerator product. We've got an ATO ruling on the downsizer. We also have developed a relationship with an affordable housing, which will be a significant event going into 2021. But if I just point at just another very significant transaction for us and transformational is that we're working with a group, and this is public knowledge, Ost Agri, which is building businesses from what they call in the agricultural space, of course, from the pasture to the plate. And that's a significant transaction where they'll be looking to onboard their assets onto the DomaCom platform, which is something in the vicinity. We're just undertaking due diligence, but it's in the vicinity of some 300 million, and we'll provide a revenue recognition agreement of about 2.6 million per year on the basis of those assets then coming onto the platform. If I could have the next slide. This just shows you our growth, and we've got some 75 million. We believe that's going to grow significantly with the things that we've got ahead of us next year. Next slide, please. I just wanted to, the key drivers, and I think this is where we've set ourselves up going into 2021, as I talked about the rental property accelerator product. I know we've got limited time, but what this has allowed us to do is actually to buy property at 10% discount to the market. And I actually mean a discount because we get all the properties with a valuation. That 10% discount goes to the investors. A part of that we give to the tenants in the form of a tenancy. They get equity in the property. So it's actually getting tenants on the property ladder, but it's also looking to get good tenants and having long-term tenants, but allowing them to get onto the property ladder. We've already done 3 properties in this area. We believe that's going to be an exciting property moving into 2021. The affordable housing. So this is significant development. This is actually the same concept, but working in the affordable housing area. So we've actually signed an agreement with Blue Chip, which is a community housing provider, a tier 1 community housing provider. And we've got a pilot program for some 250 million in affordable housing over the next few years. That'll be 100 million that will actually be borrowing from the government. So the government set up a government bond program to borrow money cheaply. So you're borrowing money at 2%. We will have essential workers renting these properties. So effectively they're paying 75% of the market rent. So hence it's still attractive for our investors on a yield perspective. So, and it's actually increasing. As we know, there's been a lack of supply of affordable housing. NDIS is another important area and limited time, but we've actually got 2 of NDIS properties moving, and they're ahead as I speak, and they're again very much a yield play. The other exciting thing we've got coming, we've been working hard on that this year, is in the Islamic community, actually building a Sharia compliant product. Traditional Muslims cannot actually borrow money, so they actually must, they're not allowed as a Sharia compliant product. So we're working on a product which will get a tax ruling that will actually be Sharia compliant, and we're working with a major distribution client on that. So we believe that that's going to come on board more into the second half of next year. The other important development, more for our equity release product, was the downsizer. As people who follow the financial markets, downsizer really only applied to people that who were actually going to move house. You know, you could, if you're a retiree, you could sell your house and put 300,000 into your superannuation retirement income. Here, DomaCom is the only product that's actually achieved where you can stay in your home, sell some of the equity in your home and put that money into the superannuation product. So that's a significant development for us. Next slide, please. Please move on, because I know time's again, and this one, please move on, because we've really spoken about those. Again, just on the senior equity release, I would only just add that we've just had the retirement income review that has just come out at the just recently. And again, the house was, there's been more conversation about how you can use the house to help your retirement, which previously that was sort of a no-go zone. So this again is feeding very well into DomaCom's equity release equity release product, I should say. Next slide. So look, I think, you know, DomaCom really has built products for the landscape in terms of self-managed superannuation funds. Many of those it's become harder and harder for them to actually get leverage if they're wanting to buy properties. DomaCom's product actually allows, we actually are able to borrow within the product. So it saves them getting limited recourse borrowing. We've also, you know, the property, you know, in terms of where we've had an oversupply in the property market, DomaCom through the rental property accelerator has been able to take advantage of that vacancies that have existed. And again, in the self-funded retiree area, helping people through the equity release product support their retirement so they have a good and healthy and happy retirement. If I can have the next slide. This just really shows you our fee structure. So again, it's fairly standard in terms of the different asset classes. So, no surprises there. We earn our fees in terms of the assets under management. Next slide. So look, I think in conclusion, I really think that Domicom is very primed for growth into 2021. A number of things are aligning for us. As I said, we're getting good traction on this rental property accelerator. The affordable housing is a very significant win for us. To building the Islamic product. I talked about the Ost Agri transaction, which is transformational for the Domicom group. So, we really look forward to 2021. And just on the last slide, really just shows you the share price of the Domicom fund. So I think I'd leave it there. Thank you very much, Tim.
Thanks, Ross. A couple of questions. From a practical perspective, there's lots of products you've shown there. And if a house is for sale and people are, putting in small bids, when does the house sell and when doesn't it sell? Do you have to achieve 100% bid for the product?
With our normal product, we have a full process there, Tim. So a campaign is run. So initially a campaign. So let's say the house is $1 million and we're going to borrow. We have an arrangement with Latrobe. So let's say we're borrowing 40% of the money. So we have a capital raising program. So we raise 600,000 and then we get the loan from Latrobe. So yes, we need to have all of the money to actually, because the property is then bought in the name of our custodian.
And you mentioned kind of different generational groups. Where's your sweet spot at the moment in terms of where have you seen the growth?
Well, look, I think it's still in the accumulation area, certainly, through our financial planners and people. But having said that, as I had mentioned in the presentation, we've seen significant growth in our mortgage, pooled mortgage product. So people hunting for yield. You can get attractive yields. As we know, a lot of the banks have moved out of this market. And, you can be earning, we're doing some developments where those yields can be in the 7s and 8%. So, we're a business to business. So that's really the financial planner who's dealing with the client. So, but we really do feel we've got products for all of those ages, for the accumulators and also for the let's say, the retirees. They're actually, hence the equity release product.
And I mean, you're a small company and you've got lots of different products, a big, broad product set. Is that one of the risks, that you're kind of offering too much to a broad market?
Look, we don't believe so. Remember, we're sort of the machine, we're the engine. We work with, we don't know property per se. We're not property specialists, so we work with property people. So in a way, we plug in to the market that is out there. But we do believe we've got products that are, from a demographical change, affordability, they're, in some ways we're becoming, and it's maybe not through the vision per se, more of an impact style of fund, because of looking at affordability, looking at retirees and their retirement, renewable energy. We're getting quite a lot of interest in solar farms, wind farms. So yes, it's a big rush.
And I know there's kind of a lot of regulation and compliance around that. How do you tiptoe through those different avenues?
Yeah, but look, we do, but in some ways that's very healthy, because we have a full due diligence. And once you do it, as I said, we've done it 70 times, but no property gets put onto our platform. And once we've done our due diligence, so the valuation must be within plus or minus 10%. Right. And we've had some situations where people think, oh, it's worth this. Well, it isn't worth that. So we will not onboard unless it has been independently valued. And we value all of those properties on a regular 12-monthly basis, because we are a retail managed fund. So we do have very good controls and processes in place, and it's all there to protect the investor.
Ross, thanks for your time. That's all we have time for. We'll see you again. Have a good Christmas.
Thank you very much, Tim. Thank you.